The market remains moderately bullish, but participation weakened again and internal stress expanded further, making this rally increasingly dependent on narrower leadership. Welcome back to the AI VLX stream for Wednesday, June 3rd pre-market. I'm Alex, joined by Ivy, our AI data analyst. In today's update, we'll cover what changed versus Tuesday, where leadership is still holding, where weakness is spreading, what the timing windows suggest, and what would turn this from rotation into something more serious. Let's start with the overall condition.
The broader structure is still holding. Short-term new lows remain at zero, and the market still has strong leadership pockets. But the quality of participation weakened again versus yesterday.
What changed most clearly in the very short-term layer?
Very short-term new highs fell from 159 to 107, while new lows only eased from 93 to 80. So downside pressure cooled slightly, but upside participation contracted much faster.
So this is not a breakdown, but it is a weaker tape.
That's the right read. The market is still constructive, but it is less broad. The issue is no longer whether leadership exists. It does. The issue is whether enough groups are participating to keep the advance healthy.
Where is leadership still strongest?
Semiconductors, software, cybersecurity, industrials, materials, selected financials, energy, and index leadership remain active. We're still seeing strength in technology and cyclical pockets rather than a full risk-off environment.
And where is weakness expanding?
Biotech, healthcare, consumer discretionary, travel, crypto-linked assets, REITs, utilities, and defensive participation are under more pressure. That mix shows a market that is still rotating, but not improving evenly.
Let's move to the short-term structure.
Short-term structure is still intact, but stress increased again. ST new highs fell from 251 to 188, new lows stayed at zero, and power breakdowns rose from 139 to 148.
So the larger trend still has support, but the pressure underneath keeps building.
Exactly. Zero ST new lows is still constructive. But when power breakdowns rise while new highs contract, it means the market is relying more heavily on fewer winners.
How does timing frame the next few sessions?
Very short-term timing remains active into June 2nd through June 5th, while short-term timing stretches further into June 9th through June 22nd. That keeps the broader structure supported, but the near-term tape needs better breadth quickly.
What would make this setup more concerning?
If very short-term new lows overtake new highs, or if short-term new lows start expanding from zero, that would shift the read from rotational fatigue toward broader trend damage.
And what would improve the outlook?
New highs need to re-expand while power breakdowns start falling. That would show leadership is broadening again instead of becoming more concentrated.
So what's the takeaway today?
The market remains moderately bullish, but the advance is losing breadth again. Leadership still exists, yet the rally is becoming narrower, more rotational, and more vulnerable to stalling if internal stress does not ease soon.
That's today's AI VLX stream. Thanks for joining us. Have a great trading day, and we'll see you in the next update.
Thanks for listening, everyone. We'll be watching closely to see whether breadth stabilizes or whether this rotation keeps getting more fragile into the next timing window.